Welcome back to BitcoinDorks. Today, we're diving into some concerning news for the world of privacy coins. Recently, the privacy-focused cryptocurrency community received a blow as local Monero, a prominent peer-to-peer marketplace for Monero, XMR, announced its closure. This announcement sent shockwaves through the crypto community and raised questions about the future of privacy coins in an increasingly regulated landscape. Local Monero, much like its counterpart Local Bitcoins for Bitcoin, provided a platform for users to buy and sell Monero in a peer-to-peer fashion, allowing for private and anonymous transactions. However, despite its popularity among privacy advocates and enthusiasts, Local Monero cited regulatory pressures as the primary reason for its closure. So, what does the closure of Local Monero mean for the broader privacy coin ecosystem? Well, it underscores the challenges faced by privacy-focused projects in navigating the ever-changing regulatory landscape. Privacy coins like Monero, which prioritize user anonymity and transaction privacy, have long been the target of regulatory scrutiny due to concerns about their potential use in illicit activities. In recent years, governments around the world have stepped up their efforts to regulate cryptocurrencies, with a particular focus on privacy coins. Regulatory bodies have introduced measures aimed at increasing transparency and accountability in the crypto space, including stricter Know Your Customer, KYC, and anti-money laundering, AML, requirements for crypto exchanges and service providers. These regulatory pressures have made it increasingly difficult for privacy-focused projects to operate within the confines of the law while maintaining the core principles of privacy and decentralization. Many privacy coins, including Monero, have faced delistings from major cryptocurrency exchanges and crackdowns from regulatory authorities, further exacerbating their challenges. However, despite these setbacks, the privacy coin community remains resilient, with developers and enthusiasts continuing to innovate and advocate for financial privacy. Projects like Monero are constantly evolving to stay ahead of regulatory challenges, implementing new features and technologies to enhance privacy and security for users. The closure of Local Monero serves as a catalyst for innovation within the privacy coin ecosystem. While it may seem like a setback, it is not necessarily the end of peer-to-peer trading for privacy coins. In fact, the void left by centralized platforms like Local Monero has spurred the development of alternative solutions and decentralized exchanges, DEXs. These platforms leverage blockchain technology to facilitate peer-to-peer transactions directly between users, without the need for intermediaries. By operating on decentralized networks, DEXs offer users greater autonomy, security, and censorship resistance, aligning with the core principles of privacy coins. We've witnessed an explosion of decentralized finance, DeFi, platforms that have reshaped the financial landscape by providing decentralized alternatives to traditional financial services. DeFi protocols enable users to borrow, lend, and trade assets without relying on centralized intermediaries, offering unprecedented levels of financial autonomy and control. Drawing inspiration from the success of DeFi, developers within the privacy coin community are exploring ways to integrate privacy features into decentralized exchange protocols, creating a new generation of privacy-focused DEXs. These privacy-centric DEXs aim to provide users with a secure and private trading experience while maintaining the principles of decentralization and censorship resistance. By leveraging cryptographic techniques such as zero-knowledge proofs and ring signatures, these platforms enable users to transact anonymously without sacrificing security or liquidity. Furthermore, many privacy-focused DEXs incorporate features such as atomic swaps and cross-chain interoperability, allowing users to trade across multiple blockchain networks seamlessly. One of the key advantages of privacy-focused DEXs is their resistance to censorship and regulatory interference. Unlike centralized exchanges, which are subject to government regulations and jurisdictional restrictions, decentralized exchanges operate in a permissionless and borderless manner, enabling users from around the world to trade freely without fear of censorship or surveillance. This censorship-resistant nature makes privacy-focused DEXs an attractive option for users in regions with strict regulations or surveillance practices, where access to traditional financial services may be limited or restricted. By eliminating the need for third-party custody and centralized order matching, these platforms reduce the risk of security breaches and exchange hacks, which have plagued centralized exchanges in the past. Instead, users retain full control over their private keys and assets at all times, ensuring that their funds remain secure even in the event of exchange downtime or disruption. Privacy-focused decentralized exchanges, DEXs, play a crucial role in promoting financial privacy and autonomy in the crypto ecosystem. Unlike centralized exchanges, which often require users to undergo extensive Know Your Customer, KYC, and anti-money laundering, AML, verification processes. Privacy-focused DEXs prioritize user privacy and anonymity. By minimizing the collection and disclosure of user information, these platforms enable users to trade assets without revealing their identity or personal information, preserving their financial privacy and protecting them from surveillance and identity theft. The traditional model of centralized exchanges poses significant privacy risks for users, as these platforms typically require users to provide sensitive personal information, such as government-issued identification and proof of address, before they can trade or withdraw funds. This information is often stored on centralized servers, making it susceptible to hacking, data breaches, and unauthorized access. Moreover, centralized exchanges are subject to government regulations and jurisdictional requirements, which may compromise user privacy and expose them to surveillance and monitoring by regulatory authorities. The rise of privacy-focused DEXs has sparked a broader conversation about the importance of financial privacy and autonomy in the digital age. As governments and corporations increasingly surveil and monitor financial transactions, individuals are seeking alternative means to protect their privacy and assert their financial sovereignty. Privacy-focused DEXs represent a step towards reclaiming control over one's financial data and transactions, empowering individuals to transact freely and privately in a world of increasing surveillance and censorship. In conclusion, while the closure of local Monero may seem like a setback for the privacy coin community, it has catalyzed a wave of innovation and development within the ecosystem. The rise of privacy-focused decentralized exchanges offers users a secure, private, and censorship-resistant alternative to centralized platforms, enabling them to trade privacy coins freely and autonomously. As the privacy coin ecosystem continues to evolve and mature, decentralized exchanges will play an increasingly vital role in preserving financial privacy and autonomy for users worldwide. And there you have it, an in-depth exploration of the rise of privacy-focused decentralized exchanges and their significance in the context of the closure of local Monero. Stay tuned to BitcoinDorks for more updates and analysis on all things crypto.